Karen on the phone yet, either others?
Yes.
I'm just trying to, I see. I see Sue, I see Susan. Okay, I think we're all about here.
Yeah, we're just waiting for Lynn.
Good, one more minute. And we'll get going.
1 o'clock in the morning for Lynn, you'd be, you know, forgiven for maybe still being asleep.
Okay, we're going to get going. I assume Lynn will join us shortly. So good day, good morning, good afternoon. I guess good morning again for some, but the next morning compared to here. It's great to have everyone together again. And I could sense that we sort of have that mad dash, which regardless of whether it's pre-COVID or COVID times, it always seems like a mad dash to the year end. Everyone wants to get everything done. So we apologize for sort of frenetic pace over the last couple of weeks. But there's a lot to get done. And I know we want to get things submitted to the PIOB and to our board for the December meeting. And could you believe that the December paper postage will be coming very soon? It's great to have everyone here, especially thank you to our PIOB observer, Karen Stothers, for attending, and of course our official observers, Jim Dowkin and Yosh Matsumoto from the Japan FSA. This is one of the things we've highlighted as part of our strategy and live in it is our coordination with IESBA, and today is really all about that. And so it's great to have our friends and colleagues, Stavros, Richard Flack, Mike Ashley, and IESBA staff along for this journey with us today. And they will be, I'm sure, very active participants. And I'm really pleased that we're making so much progress on this topic on the definitions of listed entity and PIEs. So I also, on the final welcome all of our public observers who are following us live on our YouTube channel, and thank you them for keeping in touch. Recordings, as always, will be posted after the meeting date. So if you don't get all of it, or you want to relive the excitement of our board meetings, it'll be there for you to live again. So that's great. And of course, you could always follow us on our social media platforms. So let's begin. We will start the session by focusing on IESBA's project to review the definitions of listed entity and public interest entities. They'll provide, IESBA is going to provide us a presentation on the changes since we last spoke on the topic. And then we will focus on 4 areas identified in Agenda Paper 1B, which are overarching objective, the potential for replacing listed entity with PIE, definition of PIE, and transparency in the auditor's report. We all know that there's a big public interest in trying to get convergence between our 2 boards on this topic, recognizing that both boards are independent and we use these terms in slightly different ways. But we also know that our standards tend to be applied together. So it's been a big priority for us to achieve convergence on this topic. And before I hand it over to Mike, I just wanted to invite Billy to explain the level of coordination that has occurred since we met last.
Thank you, Tom. And as you've indicated, close coordination between the IAASB and the Ethics Board has really been very prominent the last 12 to 18 months. I think in September, we just completed our QM projects on which we coordinated on 10 separate topics with the Ethics Board in getting those standards across the line. Ethics is taking the fees proposals to their board in December for approval, on which there's also been close coordination. And also no different is this project where we've got Josephine and Fiona as correspondent members on the PIE task force. Apart from that, there's been close coordination at the staff level between myself, and you will see that Dan has also joined us on video. So for this project, myself and Dan are actually the IAASB staff, and we've been coordinating with Ken and Jeff. We also formed a little internal working group, Dan, myself, Josephine, and Fiona, to put the issues paper together, and also to provide input on a number of the PI task force meetings. And then obviously Josephine, Fiona, and Mike has been coordinating very closely in the lead up to this meeting. So you can see this is really, again, a project where we've had very close coordination, recognizing that we're dealing with, in a lot of respect, two completely different boards that have very different views sometimes on different topics. But I do think we have laid a foundation to get to a good point on this project. Thank you very much, Tom.
Thank you, Billy. Okay, I think we should, there's a lot to talk about and little time. I think we should just go right into our work here. Mike, thank you for leading this effort, and I turn it over to you.
Okay, thanks, Tom. And hopefully I can skip through the first few slides very quickly because they're just really a recap. Go back one though, Jeff. Give me a chance. So really objective of this session, as Tom's indicated, just a little bit of a recap and where we got to in terms of our information gathering as a task force, to talk a little bit again about the overarching objective, PI definition, how we see the role of local bodies, a bit around firms and transparency disclosure, and then just to pick up a few things right at the end. So in terms of just a recap, you'll recall that at the July 2020 session, this was your first opportunity to discuss it as a board. I think we got general support for sharing an overarching objective, providing that we can make sure that both boards are comfortable with that. I think there was a recognition that the direction of our work in terms of replacing the term listed entity with PI, and that might impact the ISAs as well as with our work. There were some concerns that expressed at IESBA at that stage, which were replicated in the IAASB discussion about the local body capacity to refine the high level PI definition, which I'm pleased to say, given the outreach we've done to a number of PAOs around the globe, I have less concern about than I did perhaps 6 months ago. And there were some mixed views, I think, about our suggested transparency disclosure requirement, which obviously we'd like to explore a bit further today. So in terms of the information gathering since July, we've had the responses to our exposure draft on NAS, which had a question around PIs. We also had the joint CAG session. As I said, we have done a survey with a number of PAOs and also with some meetings that have been conducted by staff. We've also tackled the question of related entity, although we're unlikely to deal with that in the context of the PI project. We do think that there is potentially work to be done by IESBA in terms of how do we actually class related entities as part of the overall audit client when considering that definition. And in particular, I think it's fair to say that the current definition of audit client and thinking about related entities within that context is very much geared towards what I will regard as a conventional corporate structure, and has less regard to things like sovereign wealth funds, private equity complexes, etc. And I think there's some work to be done there. But as I say, that is likely to be taken out of this project and dealt with separately. And lastly, we've got a session with our SMP advisory group in November. Just in terms of the responses to the NAS exposure draft, basically no significant issues raised by respondents. 17 had no comments at all, 42 were broadly supportive direction of travel, 7 were not. So I think generally speaking, there were no great surprises to come out of that. In terms of the CAG meeting, there was general support for a shared overarching objective and the factors that we'd listed in our paragraphs 400.8 and 400.9, which we'll come on to. We clarified that focus of public interest is on financial condition. I know at the last board there was some concern about what that phrase actually meant. We've stuck with that phrase primarily, I have to say, because nobody has come up with a better one. Clearly, it's always possible in the basis of conclusions or in FAQs or anything else to better explain what it is we are getting at, but it is essentially designed to focus public interest in relation to the work of auditors. And since the work of auditors is largely defined these days in terms of financial statement audit, that is very much what it is geared towards. There have been questions raised around things like environmental audits, etc. Clearly, that is an area, I think, which has a capacity for a more expansive PI definition in the future. But I think it would be a PI definition which would be unique, I say unique, would be geared towards that element of public interest. And I think it would probably come after the work of auditors in terms of environmental statements, etc., is perhaps better clarified and codified than it is today. So at the moment, the focus is very much on financial statement audit, financial condition. We had a few queries, comments about the list of PI categories and what other categories we had considered, but generally I think the CAG was supportive of where we've landed on that. And there was a few queries, comments on the requirements for firms to determine if additional entities be treated as PI. But again, I think broadly people understood why we had got that in there. So again, just to remind you, the overarching objective that we'd landed on was basically by looking at, was there a significant public interest in the financial condition of certain entities? That led to a requirement to have public confidence in those financial statements. In turn, that was engendered by having confidence in the audits of those financial statements. And that's what these requirements, i.e. requirements from both IESBA and I believe, but that is for you to determine ultimately, IAASB, those additional requirements are largely geared towards enhancing confidence in the audits. It's not having a different standard of audit or a different standard of independence, but it's enhancing the confidence both in independence and indeed in the carrying out of the audit. So that's where we went to. In terms of 400.8 and 400.9, where we are currently, we have made some very minor modifications to what we had originally. As I said before, we have retained financial condition. We've expanded the first bullet to talk about nature of business or activities, principally because we didn't want to be seen to be excluding not-for-profit. We haven't got it as an included category at a global level, but with certainly no intention to exclude it if it was appropriate in certain jurisdictions to include not-for-profit organizations. So that's the reasoning for putting in activities. We have a new bullet point in there about regulatory supervision, but again, regulatory supervision aimed at financial conditional financial obligations rather than general regulatory supervision, if I can put it like that. So the mere fact that somebody might be subject to health and safety regulation, it does not, in our view, make it a PI for the purposes of our standards. We included in the fourth bullet a concept of substitutability. We did actually try using that word, but then we decided it wouldn't translate very well. So we've actually expanded what we mean by that. But effectively, it's obviously important if an entity fails that it can be easily replaced. Otherwise, that tends to have a knock-on effect to the sector in which it operates, and that can have a knock-on effect more widely. And we have just clarified in terms of the potential systemic impact, it's really on other sectors, not just the sector in which it operates. And you'll recall that I think at the last IAASB meeting, there was some concern that we shouldn't be seen to be putting in two standards of audit, and that certainly wasn't our intention. So we actually decided we'd eliminate the word additional in this one, simply because that then hopefully removes that slight connotation. You'll also be pleased to know that I resisted the attempt by one IESBA board member to make it clear this was all to do with independence, because I do think ultimately this should be both independence and auditing standards in terms of PI definitions. So we very deliberately haven't made it a direct linkage to independence in 400.9, which hopefully will make it easier for this board to potentially pick up and run with in due course. So really, that's where I wanted to pause and just seek any views in terms of where we're currently at, both in terms of the overarching objective, as I've explained, and also our current version of 400.8 and 400.9. So happy to take any observations, questions.
Thanks, Mike. So we're talking about the objective right now and paragraphs 400.8, 400.9 of the code proposed. Any comments? Do I read silence as full support?
I certainly do.
Kaiue?
Yes, silence is support, and that is what I want to mention. I continue to support the overarching objective to express in paragraph 400.9 of the IESBA code, and as read together with paragraph 400.8. So I support it. Thanks.
Thank you. Imran.
Good afternoon, colleagues, and thank you very much, Michael, for your presentation. Let me congratulate you on the progress that the PI task force has been making in these drafts, as well as the efforts in respect of coordination. I appreciate that the summary we heard of coordination is really just a summary. There's probably been many hours spent on this and much arrangements in it. So congratulations on all of that to get us to this point. I have a few remarks. I'm not sure whether they would fall into the category of question or comment, but maybe for the benefit of the public session, some explanation, an opportunity to respond, Michael, will be helpful to get on the record, which may help complete the picture of where we are, particularly in relation to these paragraphs. When we worked on the language of significant public interest at the time of the QM standards, we had a significant number of respondents say to us that the SPY concept was hard to put a finger on. And what one looks at now, having us having settled the QM standards, the lead-in on 400.8 seems to maintain the possibility that SPY, or ask the question whether SPY is a subset of PI. Or alternatively, in the words of people who have responded to ISQM 2 scoping paragraph in ISQM 1, the confusion that existed in the marketplace then about PI versus SPY, and how does what we have here resolve that? The second comment about this overall objective is that it would seem from how it all stacks together now in the second draft, or close to second draft that we're looking at, that the definition of PI in R400.14 works well only if one reads it with 400.8. And so the purpose of 400.8 is to provide some context to 400.14. And I think that for those of us who may be looking for this and looking for that in 400.14, you're going to point us to look at 400.8 because that provides this overarching objective. The hope, though, is that there is a way with a cross-reference to more closely reference 400.8 to R400.14. And the best example of it, Mike, is that the definition that you've now provided us with in page 5 of agenda item 1C really only lifts up R400.14, and from what I can see, doesn't have a reference to 400.8 in it. And I can appreciate how a user looking at this definition alone arrives at the conclusion that this is the A to Z of the definition, and that it is not connected to anything else. Whereas, as you've expressed in this question here, the overarching objective is crucial in understanding how the definition works. Thank you. I thought I'd raise those two comments in the plenary. I will raise the remainder of my comments offline, Mike. Thank you very much.
I guess, Imran, I share much of your perspective. I do think if the objective is right, then it's supposed to be the similar rationale for why we have our spy concept, and then you follow the definitions start to follow on. At least that's how I read the logic of it as well. But we'll leave Mike to respond as well after we get a couple more comments. Chun-Li?
Thank you, Tom, and thank you, Mike. My comments are a lot more straightforward and simpler, but interested to hear the reaction to Imran's comments. I just want to come in to support what's been done, including the removal of additional from point 9. Just to rehash off the old points about financial condition, and just wondering why have we rejected, I guess, the use of the, I guess, IFRS terminology of maybe financial position and financial performance. Why would those be not appropriate as a replacement? Just a question on that. Thanks.
Yeah, Rich?
Thanks, Tom, and thanks, Mike. It's always good to go a little later, and because the point that Chun-Li just raised is right on point with mine on financial condition. I mean, I raised this before. I didn't see the rationale in the papers as to why it wasn't considered. I think using the terms financial condition lead the reader to not understanding, are we talking about, as Mike said, the financial statement audit, which is focused at financial position and financial performance, and could get people thinking or wider, whether it is performance sustainability audits or even further taken where we might get to eventually on ongoing concern. And so this concept of financial condition is, to me, much wider than what we're looking at in the auditing standards presently, which is focused on the underlying gap, which would be financial position and financial performance. So I really do have a problem with keeping the word condition. I think it's a loose word and one that's subject to confusion. Where I think, again, we can fix it, maybe Mike said there wasn't a suggestion on how to fix it. I think you could fix it by deleting the including phrase in the first sentence, and in the second sentence, the lead into the bullet points, just write the extent of public interest in the entity's financial position and performance, or financial performance, will depend on factors including, and then going on to the bullet points. Another point, and again, Mike raised this on changing some words to get into easily replaceable, but that caused me a concern of what's easy, and really is it understandable what we're trying to get to on what's meant by easily replaceable. I do understand what Mike said, but I'm not sure that words get me to that. And then again, I have the issue on what easy, how that might be defined. The new bullet point on regulatory supervision, I think it's is a good addition, but I guess the question is it just for the sake of regulatory regulation or supervision, or is it really meant to be that supervision that relates to the financial position and financial performance? So if it doesn't relate to that, then I'm not sure how it brings into the greater public interest. And then lastly, I do appreciate the deletion of the word additional. Again, I also had a comment on this back when we talked about it before. I still wonder though, what essentially we're saying is the performance, the independence requirements that come in, do they enhance the confidence of the audit, or are they just providing more transparency through, maybe the stuff that's in the ISAs relating to 260 and 265, and it sounds like someone on the IESBA board was questioning whether you should limit this to the independents, and I guess I would probably be leaning towards that because I'm not sure, we're prejudging if by putting in enhancing the audit that all these changes that are suggested through the IESBA would go, just a pure replacement into the IAASB language. And I don't think we're there yet. I think there's still a lot to debate and agenda time needed to discuss this at the IAASB. Thanks, Tom, and thanks, Mike.
Thank you. One more, Eric.
Thanks, Tom, and thanks, Mike. I just wanted to give my support to the overall objective of trying to define public interest entity, and I thought that some good progress had been made. Like others, stumbled still on the reference to financial condition for many of the same reasons that Rich has just articulated. I thought I heard you say, Mike, that might be dealt with in the BFC, which I think would be might be helpful to the to understanding where we're coming from on that. Same comment as Rich in regards to the easily replaceable. Just didn't really understand what that meant. And I'm also not clear yet on, if this definition is in an independence requirements within the IESBA code. I'm not sure how it translates over into the circumstances where we have been using similar terms in our standards, but happy to explore that further as we get through the discussions today. Thank you.
Okay, Mike, I see Imran's hand came up. Could you wait one more intervention and then Imran?
Thank you. I'll be a few seconds only. Just to pick up on the comment we've heard now, 3 board members make about financial condition and the possibility that somehow this gets addressed in the basis for conclusion. I think if we reflect on how we as the IAASB planned to use this, then the settlement of this matter through the base of conclusion certainly won't get us there. My view, like others have described, is that PI could relate to other financial statement matters other than the matter of condition. And a financial statement audit has an interest in matters beyond the matter of condition alone, things like results and prospects and other possibilities. And that's why that terminology is particularly challenging in this objective paragraph. Lastly, on the question of replaceability, Mike, do you want to reflect on whether the word not is missing from that sentence? And maybe that helps to understand what it is that you're getting at. Because it's about that it is not easily replaceable. If it's not easily replaceable, then it meets the threshold of a PI, as opposed to whether it is easily replaceable, in which case it would be just write it off and forget about it, and then it's not a PI. So I thought that was perhaps a gremlin that I crept in there in the understanding or in the grammar. Thank you.
Okay, Mike.
Thanks, Tom. And I'll try and remember all of the points that got made, but hopefully somebody can help me out if I miss one or two. I think it's important in the first place to just understand what 400.8 is. It is context. It is not designed to be a set of requirements. I did mention basis of conclusions. The other thing which I'm quite determined that we need to do as part of this overall project is to write some guidance as to what it is we are expecting local bodies to pick up on in terms of how they think about it and apply it in their jurisdictions. Now, we can't dictate to local bodies, so it might not come out expressed as guidance for local bodies. It might come out expressed as guidance for firms, because what will be applicable for a firm in terms of thinking about what it classifies as a pie that hasn't already been picked up is equally applicable, I think, for a local body to think about it as well. So what that will do, that, in my view, is to take these aspects and, if you like, explode them and talk about them in a bit more detail. I understand the point about financial condition. It was, I mean, if anything, I'm slightly confused now, because from what I heard, Imran was saying it is narrower than what gets considered in financial statements, and Rich was concerned that it's much wider than what gets considered in financial statements. So I got that slightly mixed message, but I think it's fair to say that we did start off by having just financial statements, and we were encouraged by our board to expand it somewhat and not appear to be narrowly focused just on financial statements, but to think about financial condition more broadly. Now, clearly, the auditor doesn't have a role necessarily to play in thinking about that financial condition more broadly, but it does, I think, dictate how you might think about what are those entities which there might be concern over. So I do think that, again, if we explain it, I don't think it is a problem in terms of how it is then applied as a context. But it is very much contextual. I take the point Imran made about not easily replaceable. I think that is a good suggestion, and we will certainly pick up on that. In terms of the linkage between 414 and 400.8, again, I would hope that the guidance that we produce will explain very clearly how we are taking the concepts in 400.8, and that leads us to, at a global level, a view that these are the sorts of entities, as we've outlined in 400.14, that should be being considered by local regulators as being worthy of consideration as PIEs. But I do think it's important to understand that we are anticipating that very few, if any, local jurisdictions will adopt wholesale what we have set out in 414. Our expectation is they will adapt and refine it, and particularly in terms of how we have tried to have a very broad definition of, quite frankly, what is a bank, i.e. a deposit-taking institution, they will probably define that by reference to their local legislation. Most countries have laws which say what is and isn't a bank and determine how it is regulated. We are fully expecting that that's how local jurisdictions will apply this. So we're not expecting anybody to just pick up universally the definitions we've got in 400.14. And you will notice that one of the things we have done, Imran, is we have tied the last bullet, and we'll come on to that. We have done some direct linkages back to the objectives in 400.9 in terms of how we expect local regulators to be looking at that and how we expect firms to be thinking about it. I'm trying to think whether that's picked up most, if not all, of the points that got raised. Is there anything fundamental I'm missing, Tom?
The SPI comment?
Sorry, SPIs, I'm not an expert on SPIs, that's your board's province. My understanding of the definition of SPIs was this was something that was done in order to ensure that there was, if you like, a proportionate application of ISAs to a particular class of entities. In terms of proportionality, our whole thrust on this is to put that onus very much back into the hands of local regulators and laws and regulation. In other words, the whole thrust of this is to say, if you need to have enhanced public confidence in the audits of financial statements of certain entities, this is what you should be doing, both, and I believe it's both in terms of independence, but it's up for you, obviously, to say also the quality control procedures that you adopt in order to have that enhanced confidence. It's then up to the local regulator to balance, in terms of the public interest, the proportionality of applying those to particular entities in their jurisdiction. So in other words, we set out what the requirements are if you want to have that enhanced confidence. It's up to the local regulators to determine where that is best applied. That's why I think actually, ideally, it would lead to you abandoning the term spies.
I would share a similar reading, but Philly, would you like to come in?
Yeah, maybe Tom, just on the ESBI concept, you will remember that last year in September, when we had the joint session, we had actually a detailed paper on this that is referenced in agenda item 1B as well. And remember, the reason why our board in the end, let me put it differently, our board does not use the PI concept. And the reason for that was because of the difficulty we had with, I think Imran used the words that we found it difficult in our standards to put our finger on what the PI is. And from that, the use of the entities of significant public interest in evolve, and which we use in some of the application material where we do have differential requirements for listed entities. And it was almost our attempt to deal with some of the issues around the PI concept, which was mainly linked to the sort of what is in and what is out problem that we had. That we sometimes ended up in a situation where we believe if we were to use the PI concept, we will catch entities that shouldn't be caught by our requirement. And equally, in other instances, we may not catch certain entities that should actually be caught. And that's why we ended up using the ESBI concept. I think what Mike has just explained is that through the PI project, one of the things now is that the ethics board is trying to address that and see, can we arrive at a description of PI, taking into account also the role of local bodies and firms that will overcome those issues that we've been experiencing. Thank you, Tom.
Okay, thank you. I saw Sue's hand is up.
Hi, yeah, I wanted to pick up on something that came from Mike's response. It's probably not directly in relation to the definition, but it's to do with the roles of firms versus national regulators or local bodies. Because, Mike, you said that you would probably be baking in guidance for local bodies, but it would be under the cloak of being guidance for firms. But then some of the other discussions, you were talking about local bodies expanding or defining things, or you would expect local regulation would be driving the SPI discussion. And I think I mentioned it in the previous call. I'm very nervous about too much going down to firms. I can understand why it's difficult perhaps to capture at a global level, but the importance of consistency of how companies are treated between different firms in a jurisdiction, I think it is important in the public interest that it is captured at that local body level, rather than having individual firms selecting what is in and out. So it comes through quite a lot in the papers, and there's some quite difference in tone, where I think probably you expect a local body to do things. So I would very much like to see that element of guidance, such that the firm is probably only your last resort.
And sorry if I misspoke, but that's certainly the intention. All I'm saying is that the response we got, I think overwhelmingly, we haven't got all the responses in yet, but the response we got overwhelmingly from the various PAOs that we went to, and we went through the PAOs rather than direct to regulators, just because that was easier. But we asked them questions which asked them to respond, if you like, on behalf of their regulators in terms of their understanding of the local jurisdiction. And I think overwhelmingly there was support for the concept that this was something which both could and should be done locally. And indeed, there was a willingness to pick up the cudgels to the extent it hadn't already been picked up. And quite a lot of countries have already gone down this road in any event and come up with definitions of PIs. I think what there was a request for was some guidance, assistance, material that either PAOs, where they have that responsibility themselves for issuing standards, or local regulators could use in helping them think about how we, what it was we were aiming at. All I was saying was that I think that it is certainly our intention to produce that material. It's slightly hard for us to badge it overtly as this is guidance for local regulators, but we can certainly, in the obiter dicta, if you like, around it indicate that's how we would expect it to be being used. But I do also think it would be relevant for firms. But we're not expecting that in the vast majority of cases, it would come down to a firm to be just adding something into being a PI or not.
Okay. Mike, I guess the one issue that you noted the maybe inherent contradiction on the financial condition point on some members, but I thought that there was a sort of a general, at least thought to say, consistency not just amongst our board, but with other commonly accepted standards is an issue to be thought through. And if we deviate maybe the perception from IFRS or IESB, at least we need to think fully through that. And that, I thought that was, even if our board members were disagreeing in what they thought the breadth of the requirement would be, that was generally the idea, was to focus on consistency. Am I reading the comments on that point right, to some, Rich? So,
yeah, and I hate to just to pull it up, but I think the majority of the views were that financial condition was wider than, it was only Imran who and I agree with you that I think the point is the IASB and other financial statement bodies would view this as performance and position, and not the wider view of condition. And so why are we trying to move it here? And I think it'll cause us problems at the IAASB when we're then trying to reflect that objective into the considerations in the standards. And I think this should be more something less troublesome for us in the future if we stay party to what we've used in the past, financial statement, position, and performance.
Okay, I just wanted to draw that point out a little bit. It was less about the definition, what breadth of it is, about the consistency element. Imran, you wanted to come in?
Yes, if it's helpful for the minute taking and for the way forward, I had equated condition to position, and I can understand why, therefore, my understanding of it was narrower. I confirmed that the way Rich and Chun-Wee have described it is one that I can identify with and support. Thank you.
Okay.
We can certainly take that on board and think about it, Tom. The only thing I will feedback at this stage is I originally had financial position in there and told that was far too linked to the financial statements and we should back off it and make it more broad. I'm not sure whether if we just say financial position and performance, that necessarily captures everything that our board is concerned about. And just picking up the point, I think it was Rich that mentioned, what about going concern? I do think that there is a big question mark about the role of the auditor. Certainly in the UK there is, in terms of the role that the auditor plays in terms of commenting on or checking up on the going concern of an entity, which I suspect is somewhat slightly broader and wider than the current IFRS definitions of performance and condition. It is slightly more looking into the sustainability, not from an environmental perspective, but from a financial perspective of the organization. So we'll take it on board. We'll talk to our board. I have to say there was a very strong feeling at our board that we should stick with condition.
Yeah, I just have to, this is an issue, obviously, both boards are trying to stay aligned, and where the purpose of getting alignment is for slightly different reasons on both sets of standards. So, I think that's why we have these conversations, yeah. And you need to reflect the texture of some of our board concerns and what maybe the unintended consequences could be.
And as I say, I would hope that, as I say, this is meant to be contextual. It's not a requirement. I would hope, in terms of how we talk about it and in the guidance material that we're working on, that will, if you like, assist people who might be concerned about how it's expressed at the moment.
Okay, let's continue on. There's a lot more to get through, but I wanted to raise that issue to make sure that it was the full context of our board's concerns were raised. Okay, Mike, back to you.
This is where I hand over to Josephine.
Thank you, Mike. Hi, everybody. I want to apologize for the angle of my camera. I am looking at you. You just probably just doesn't look like that at the moment. I'll be covering two aspects of Agenda 1B, starting with the proposals related to differential requirements, and I'll be picking up on the auditor's report a bit later. I recognise that the board has read the papers and will be familiar with 1B, but I just wanted to highlight a couple of matters and to keep Jeff on his toes. I'm actually going to start with slide 11, Jeff, and then pop back to slide 10 if I can. So if you wouldn't mind forwarding Jeff to slide 11, thank you, lovely. So in July, the proposal to the board to us was to consider expanding the requirements related to listed entities to PIEs. And there were, of course, different views expressed on that, but on the whole, the board agreed that we should consider them on a case-by-case basis. And the decision to assign requirements to listed instead of PIE might have had valid reasons in the past that do not necessarily compromise the overarching objective we've just been talking about. And also, case-by-case basis recognises that any unintended consequences of such, say, a blanket change would actually be avoided. And of course, it's not the requirements that are affected, it's actually all the references throughout the standards that refer to listed entities that would also have to be considered in that exercise. So if I just go back to slide 10, please, Jeff, thank you. So after the board meeting, we did agree that we should actually identify those requirements and understand more about their purpose. So a little bit of a deeper dive. And I say we, actually Willie did the majority of the work in this area. So thank you, Willie. Having gone through that process, it does become quite clear early on, and you'll see this, of course, in Appendix 1, that other than scoping an EQCR, which as Imran mentioned, is very much front of mind and in our short-term memory, the differential requirements are actually very much focused on increasing transparency of the work that auditors do or other aspects of the audit through enhanced communications. And that's to those charged with governance or, of course, directly to users. I mean, the primary examples we're very familiar with are ISO 701 and the use of CAMs, and of course ISO 700 and ISO 260 in respect to communicating independence. So essentially, the other point is that the application material, as I said already, does include consideration of entities with similar public interest issues. But other than in one instance, which is in 265, I think, ISOs do not currently use the term PIE at all. So essentially, the differential requirements do not directly affect the auditor's work in terms of drawing conclusions, but are in fact focused on enhancing confidence through extended communications. So with that in mind, and having performed that exercise, the task force felt that given the purpose of these differential requirements, the IESBA ED could be an opportunity for the IAASB to draw out some initial input from our stakeholders as to whether there would be appetite for extended communications to those charged with governance and, of course, users beyond listed entities and therefore to PIEs. So, in fact, those are really the only key points that I wanted to make, Tom. So I'm happy to turn back to the questions, if I may, and then open up for the board comments.
Thank you. So we have two questions. They're shown on screen right now about the continued use of in ISAs and IESBA of listed entity, and then incorporating the use of PIEs, and then the approach of using the ED from IESBA process to obtain targeted input. Josie, one of the things I asked, and maybe this art staff, is like the mechanics too, that I think if we're going to use targeted input, to some extent, we probably need to draw attention to it in our own way to the board, whether it's a board memo or board communication. I just think while our stakeholders are, this is my opinion, and I put it out there at least for comment or consideration, that we have to do something under our name to effectively say, we're using this as ways to get input on our own because we're an independent board, but we do think that they've incorporated a lot of questions we want. So rather than rewrite it, draw attention to it in some form. I don't know if there's a tradition of that or not. I see some people nodding. Billy or Fiona, I don't know what the response is to that, and then I'll open it up for other comments.
Yeah, so Tom, if I may, we did think about that, and so the ethics board is open to us assisting and providing input to see how we can use the exposure process to also get input on the issues from an IAASB perspective. And then what we need to do on our side is to make very sure that our stakeholders, which in a lot of respects overlap, but there may also be other stakeholders that would not normally from an IAASB side respond to an ethics board consultation. But we did think about a type of a chairman's alert to our stakeholders at the same time that the ethics board exposure draft goes out. We will also then obviously use our other channels like our e-news and our social media. And then we can also maybe put out some specific requests to, for example, Forum of Firms and national standard setters to just get the word out that there are questions in there that's also relevant for the IAASB, and that we encourage people to please comment, if not on the full ED and they only interested in the IAASB aspects, to at least provide that input to us as well. Thank you, Tom.
Yeah, okay. And Fiona, I saw you raise your hand. Were you basically going to say what Billy said?
Yeah, I was going to say what Billy said. I'm supportive of doing something to bring the attention to our stakeholders, because it is really critical that they understand the implications for the IAASB as well.
Yeah, it's more than just this is of interest to you. This is actually, we intend to use it de facto as a formal part of our process. So I do think it's something more than just a tweet about it, but maybe even a memo from our board or to make it partly embrace it as our own. Okay, Kaiwe.
Thanks, Tom. First, a question: do we cover both question 2 and 3, or yeah? Okay,
that's both questions. So sorry if I didn't say.
No, that's fine. I want to clarify it. Thanks. So I will start with my reaction to question 2. In my view, it seems to me that the board needs to understand the impact of the change in definition from listed entity to publicly traded entity before considering changes to the wording in the ISAs. Furthermore, whether or not to change listed entity to PI depends upon what the purpose of the original reference to listed entity was. For these reasons, I continue to believe that the decision on whether to replace listed entity with PI needs to be made by the IAASB, in my view, on a case-by-case basis. Then I have a reaction to the third question. In my view, it would be useful to obtain some input through the IESBA exposure process on the impact on IAASB standards resulting from the proposed changes to the IESBA code. However, while such input might be indicative of the direction that the IAASB might take, the IAASB, will still need to expose any changes to its standards separately. In my view, it may be helpful for stakeholders to provide input on the potential impact of any replacement in the requirements of the ISAs and ISQMs of the term listed entity with publicly traded entity or PI. That's all. Thanks, Tom.
Thanks, Kai. Julie?
And my position on question 2 is very similar to what Kai just expressed. I think there's in my view, still a potential place for listed entity and PI to exist in the ISAs. I just very close to what we've just concluded on ISQM1, and I know we had a lot of deliberation in that project on the use of listed entity when it came to reporting from a transparency perspective. So I continue to believe that on a case-by-case basis, we need to look at the purpose for the use of listed entity in each ISA and then decide which is the better term. I think they could both exist in the ISAs personally. So I'm hesitant at this point to suggest that we would just replace listed entity with PI. On question 3, I'm not opposed to asking for feedback through the IESBA process, but Tom, I shared some of your concerns that you expressed around making sure that our stakeholders are well aware that there's content in that exposure document that we would like their feedback on. So if there's a way to do that through other mechanisms, I would support that. Thank you.
Let me, on that point, because I'm sure we'll get a number of comments, is really or whoever's on the call, the proper way to think about this would be if we ask for comments in our framework of activities, this almost becomes our formal information and gathering phase, which if people were supportive, then we would run a due process for whatever changes we thought was appropriate to flow through our standards as a result. So this would not bind our board to making changes, conforming amendments de facto throughout our standards. It would sort of inform our board that is a project is needed to do that. Is that my right understanding, Billy?
Yeah, exactly, Tom. So what we're saying is the ethics board's exposure process gives us a unique opportunity to leverage that to get input from a wide range of stakeholders. But obviously, any changes to our standards would still have to go through our due process. I mean, even in any project where there might only be conforming and consequential amendments, like we did at the end of last year and the early beginning of this year, it will still have to be added as a work stream to our work plan. We will have to go out on exposure on that and follow our normal due process. So that's accurate.
Okay, so I just was, as I saw comments coming in, I just wanted to drive towards a common position on point 3. So the idea is we'd have to draw attention to it. It would be part of our information gathering, but of course a due process would follow if we made change in our standards. So if you agree with that, you could just say, I agree with that position. If you disagree with it, then you could say something else. Eric?
Thanks, Tom. So on question 2, I'm in the same position as Julie. I think we do need a case-by-case consideration, and don't believe that we're at the point yet where we can just make a blanket change one way or the other. In my view, I'm supportive of the direction you're heading, but I'm just not sure that a chair statement would really do it for me. I mean, I think we need to have perhaps our own wraparound document or something of that nature that really sets out what we would do with the input that we would obtain. We may have some specific questions of our own that we think we should be asking our stakeholders. So I think we need to think through exactly how we communicate that. But I am supportive of working with the IESBA process as has been suggested. Thank you.
Yeah, I should have said the form of communication we would decide as a board whether it's a. But I'm not sure we have to decide the exact form on this call. Rich?
Yeah, thanks, Tom. So similar to Kaiua, and I guess the others have said the same, very much on a case-by-case basis on question 2. I think we've made a lot of decisions over time that had a lot of discussions about should it be listed or should it be something different. And therefore, I wouldn't want to throw those to the side and just go with a replacement. Similar to Julie, I think there could be reasons why we take listed in some cases and PI in other cases if we can get to a grip on what PI is. I still think that's still out there, but that's what the exposure draft's about, I guess. I continue to have the concern about the cases where national standard setters do not exist in territories, and therefore how that would play into what PI is, and therefore might be more strict in those countries because you don't have the ability to bring it down to a maybe more usable area, a usable definition, and so that concerns me, and would concern. I won't be on the board when we vote on this, but would concern me if I was to vote as to whether or not the PI definition would work in the cases where we currently have listed. On the question of using the ED as a consultation, you know, I hear what you're saying, Tom and Lily, and I do agree that you know, if we want to gain something out of this, we should put something out to say, hey, there's something out there, you know, please send something in. I probably would be reluctant to go where Eric is going on, because I don't think we've done enough to get to all those types of questions that we might want. And by putting that much extra effort partially in, we might be giving the impression that, you know, exactly what the responses are or what we're going to use going forward. And to me, if this is part of the research, then I'm happy with it, because it'll just be part of what we consider when we're developing an ED of our own. But if we make it too formalized, then to me it starts to get too baked in, and we'll be stuck on that being the case. I find myself that I have to raise, you know, again, what this should have been is a joint ED. You know, these are topics that, you know, very much what a PI is we should be able to get to an agreement, and therefore we should get a joint position on this and get comments back from all stakeholders. But we again, because timing, it always is, our timing's different than the IESBA, and then it never works out. But that's why we get complaints from our stakeholders that we're not working together. I understand this call is trying to do that, to work together, but again, the right answer would have been a joint combined ED. And so anyway we get to now, we're going to be time different. I think that's my comments, Tom.
Yeah, so just to be clear, since you raised it, I want to be very clear for the public record that on this topic, we have worked very closely together, and I understand the ideal would have been a joint exposure draft maybe in some people's minds, but we've had two members of our board on their task force. Our staffs are coordinating very closely. We've had a number of conversations at this board and at our CAGs that are in some ways joint and at the national standard setter level. So I just want to give the impression, yeah, I understand your point, Rich, but I don't want people to misinterpret that we haven't been working in lockstep together on this topic. I think Josephine and Fiona would suggest that time would suggest otherwise. So Billy, you wanted to come in?
Maybe just Tom, to clarify off the back of Eric and Richard's comments, the opportunity is really there for us, and whether we do it as part of the IESBA's explanatory memorandum and ED as Rich has proposed, or a separate wraparound document as Eric has proposed, that is something we can decide on. But the opportunity is there for us to highlight the IAASB issues and ask specific questions to get information that will help us in terms of how we position the IAASB. So please, I want to urge board members, if there are any suggestions about specific matters we should pose. I mean, there's an open invitation from Ken and his team that we participate in the process of finalizing the explanatory memorandum to put in there what we need from an IAASB point of view. So if there are any suggestions about what the angles are we should cover, what issues should we cover, we've got this opportunity to do that.
Stavros, I saw your hand was raised.
Yes, thank you. Just a very brief comment about question 3. it seems to me that coordination, as you said, Tom, is indeed at the highest level it's ever been on this project. And clearly we can go forward to more, but that's where we are now. The opportunity of gathering information is from each other's exposure drafts, I think is one of the opportunities afforded by coordination. And as you said, gathering information from the other boards' exposure draft is not binding. You have to do your own due process, as we do too. So I don't see why this opportunity would not be used with all the appropriate safeguards, if you will, that you've been talking. So I would just like to clear the ground that there is no sense here that we would bind the IAASB into a specific direction because of what came out of our own exposure draft.
Thank you, Stavros. Okay, so let me, as we go, and I'll go through this, a number of hands still up, but the emerging consensus on these questions is, I've had a number of comments suggesting that we still may, as a board, while we may embrace the PI definition coming out of this process, there's a desire potentially to have case-by-case consideration of whether listed entity remains as a concept. On the third question, we're sort of the emerging consensus, but we have others to come. I just want to see if people could key off this, is that we should avail ourselves of this consultation, recognize we would have formal due process if we were to make any change, and we would have to find the right form of communication as a board to highlight this consultation and get the messaging appropriate to draw attention without overly committing ourselves to changes yet. So that's where we are right now in the conversation. Sachiko?
Thank you, Tom, and hello, everybody. With regard to question 2, I support others' view. I think it should be case by cases, and we need to wait the outcome of PI project. And with regard to question 3, hearing Tom's and Viri's and Stavros' explanation, I think it's okay that we will ask initial input by using IESBA exposure draft. Of course, we need to have a formal due process by ourselves. And with regard to how to, collaborate each other, I think if the IESBA asks some question relating to us, and then IAASB asks other question, I think it's very confusing. So my sense is that we can refer to the IESBA exposure draft rather than, explain something differently. But I think that is the appropriate right level to use IESBA exposure draft as an initial input for us. Thank you.
Okay. Fernando?
Thanks, Tom. Question 3, agree with the approach. And on question 2, also in favor of keeping listed entities until we have the whole picture about the outcome of the PRI project, and especially impacts for group audits and LCE, etc.
Thank you. Roger?
Yeah, thanks, Tom. I suppose I had some sympathy for Richard's view about the fact that, people might be asking why this isn't a joint ED process. So I think that's I understand the high level of coordination, Tom. I think that's a communication message that, we can look at the high level of communication that we've achieved in that particular area, because it could be a legitimate question that is in the back of people's minds. As far as question 2 is concerned, yes, supportive of what everybody else has said, that we do this on a case by case. Question 3, again, I am very supportive of leveraging off the IESBA. Billy's also challenged us to see if there's any other areas we want to put in there. I cannot think of any. These are the the addressing the matters in questions 1 and 2 are the first two that I would be looking at getting some information on. Thanks, Tom.
Okay, Sue.
Hi, thanks. And I think probably similar to others on question 2, prefer the case-by-case basis. Concerned about unintended consequences. We had a few examples just when we were looking through on some of the detail. And on question 3, also support the direction of travel with the using IESBA and enhancing that for IAASB stakeholders. And we'll have a think about questions. I think possibly it is the broader impacts around country-specific extensions of definitions and what that might mean. Thanks.
Okay, the consensus is holding right now. Bob Doerr.
Yeah, thanks, Tom, and I won't change that direction. Also support retaining the right case-by-case basis on question 2. Now with question 3, I support the way forward. I just think in the framework of activities and when we're thinking about information gathering and outreach, we need to be creative and flexible in leveraging whatever we can to improve the efficiency of our process while not losing effectiveness. So support that also. Thanks, Tom.
Thanks, Bob. Isabel?
Yes, hello everybody, and sorry that you cannot see me today. It seems my camera is down, so no view on the Eiffel Tower for you today. I'm also very supportive of everything that has been said on question 2 and starting by what Kai Hoover has said. I believe we really need to be cautious before we propose to move from listed to PI in the ISA. One reason why, based on where I have practiced, in the countries where I have practiced, is that often I see that the ISAs have been embedded in the law, sometimes just by reference, saying that the legal framework for auditing standards are the ISA, and that's the end of the story. But this interacts also with other parts of the law, and more specifically the business law. And if we have a look back at all the ISA where we have specific requirements for listed, I noticed, and Josephine also mentioned it, that all these requirements deal with communication requirement. And these communication requirements often do not belong only to the ISA, they're also referred to in the business law as such. So I recommend that we are very prudent before moving anything, because there may be some unintended consequences when we deal with external communication of the auditor, because it's dealt with elsewhere in the law. And so I support having a consultation phase on that, and having clear communication to our usual stakeholders on the IESBA ED, and bringing them to the points that are important so that they can anticipate the unintended consequences, if any. Thank you.
Thank you. Kai Martin?
Thank you. I'll keep this short since my views are in line with some of the others. So on question 2, case-by-case basis, so we can avoid the unintended consequences. And I very much support utilizing the IESBA ED process to obtain some views on how this can be done for us as well. Thank you.
Thank you. Len?
Yeah, thank you, Tom. On question 3, I think Tom, Willie, and Stavro, you articulated very well. But just want to add that, support the way approach. I think throughout my time at the IAASB, there's, PIOB and the public interest comments about the two boards working closely together, coordination. I think this is a perfect opportunity perception-wise, appearance-wise, to demonstrate that the two boards can work together. Now, I do know that there are certain issues we have to work through, different consultation, due process, but I think the communication piece that Willie and Tom you talk about, this is a perfect opportunity to demonstrate the two boards are working together. Question 2, like others, I think there's a place for listed entity definition, but I also have a comment perhaps for IESBA also to think about. I know there's a revision in the PI definition to change the listed entity to publicly traded. I think this might be something that require further consultation because I do know that in a CAG meeting, some members, including the stock exchanges, stakeholders, expressed that the retention of the listed entity, that concept. Also, in a number of jurisdictions, listed entity and public traded entity definitions are defined terms. So I would encourage probably outreach to members of IOSCO and World Federation of Exchanges, because I think this is actually dealing something deeper than just a simple replacement or deleting listed entity definition from a code. So those are my comments. Thank you, Tom.
Thank you, Len. Imran.
Thank you, Josephine. Thank you very much for your efforts in coordination and the great intro of the topic. Tom, I remember when we had a joint session in New York between our two boards, where we initially put our minds together around the prospects of a joint project around the PI definition. I remember the euphoria of that. And at the time, in facilitating it, I thought that we were thinking about simplification, reduction in complexity, and really the once-in-a-lifetime opportunity we had on this matter for our two boards to coordinate and come up with something that we could both use. I really seem to think that coordination, the idea of walking and talking together, was not our goal in itself. Actually, coordinated outcomes are our goal. And coordinated outcomes is whether what this project produces is something that we can embrace and use in our standard. For that reason, I'm of the view that saying we are going to use it on a case-by-case basis really doesn't move the discussion forward compared to where we set off. Because if we say we are going to make an assessment on a case-by-case basis, then what are we going to need as a board to make that case-by-case determination? We are going to need a framework. And what is that framework? The framework is this project. So either the outcome of this project meets our requirements against which we can then adopt it in our standard. My sense is that we will then re-debate each of the listed versus PI discussions without having truly gained the benefit of the coordination that has gone on here. So our goal in becoming involved was to participate at the level of the PI definition that will allow us to extend this listed entity definition requirement to PIs. There is another approach to this, of course, and that is that we adopt or think about how we adopt this as the benchmark and then opt out on a case-by-case basis. So we set the level high and opt out on a case-by-case basis because we have a framework against which we want to opt out. We say that under these circumstances, reverting to a listed is the appropriate treatment, not the other way around. Because the other way around and the propensity for change is going to be very difficult for us to move the board in respect of every one of these paragraphs. In respect of question 3, I agree that's the most sensible approach. And of course, our friends at IESBA did exactly the same on the ISQM2 ED, where they piggybacked a question on ours. And I think there's some lessons at the staff level about the nature of the question. And certainly Hankin and Dan with the experience on that project, will be able to work on how we can add a little bit more substance to the question, so it will be truly useful to our board when we get feedbacks from it. Thank you.
Thank you. I want to express my view a little bit on 2, because actually I view it in very much the same way as other board members are, and I don't believe this is inconsistent of coordination. I thought the purpose of this was to get rid of the inconsistency between the PI and SPI terminology. And if this is why the definition of listed entity, a publicly traded company, is so important, is that it's a subset defined of pi in the IESBA project, it could be perfectly consistent and reasonable of us to say there is only, because we work for different purposes, to have a subset of the pies needing enhanced confidence as it relates to audit and assurance standards. So the problem is I can't really commit until saying that we should apply it to all pies, the things that need enhanced confidence, until we run that process. And so I think it's a perfectly reasonable and consistent for the coordination purposes standpoint to reach where other board members are. That is why we need to pay particular attention, though, if we're going to go down that route, to the use of publicly traded or listed entities together, because we may need to make sure those terms are consistent in both sets of standards. So, Imran, I get your point. Unless our view is that everything, the need for enhanced confidence applies to all pies and not just a subset of the pies, that I think our positions are consistent. So we can have this debate, but that's how I get comfortable with where the great majority of our board is. And I also believe that we are addressing the fundamental objective of this approach, which was to get rid of the confusion as I look at the Venn diagram where it's overlapping on 100% conditions between our SPI versus their pi concepts. Unless I have gotten that wrong, that's at least my mindset. I wanted to let others speak first, though. Karen Stothers.
Thanks very much. I want to thank the board for taking this important topic and giving it such good and full attention. I just wanted to say from the PIOB perspective, we're a little concerned about the complexity that comes with all these different terminologies. When you're talking about the public interest, we really mean the public. And I just wanted to suggest that it should be very clear when you make your decision that you can explain why the need to have so many different terms, listed entity, PIE, if you continue with your SPI. Because I'm sorry, but it is very confusing, and it's difficult for a non-technician to understand the need for all these separate terms. Thank you.
Thank you. Okay, Jim Dowkin.
Thanks, Tom. And I want to reflect on the discussion at the CAG meeting, and the CAG was pretty clear that it wanted to resolve this inconsistency, or the view of this inconsistency, because there's a perception that some of the work on some of the standards can't move forward until we first get this resolved. And so I think the CAG members, or the way we left it was that this would be resolved and then in a sense make things much simpler from a CAG member perspective.
Jim, I just want to be clear what the inconsistency was, because again, the genesis of this project was the inconsistency between pi and SPI, and I guess I'm a little confused. We would now, even if we went down this road, we would narrow that. We get rid of that inconsistency. Hopefully, we would get rid of the need for the term SPI, because we would adopt pi and still have the idea of public traded as a very well-defined, or listed entity as a well-defined subset of that. So is the inconsistency the existence of multiple categories, which would be part of the definition of pi?
No, essentially, Tom, I'm agreeing with what you're saying.
Okay.
But it is the importance of going down that route and clarifying that.
Okay. I just wanted to make sure that I understood which inconsistency we're trying to address, because that maybe that my mindset would be totally changed if I'm getting the something different. Like I get some people want to extend requirements to all pies. Okay, any other comments on this? I think we've got a very clear direction on 2 and 3. We had some discussion about whether the idea of having special case-by-case approach about on listed entity or publicly traded entities is the right way to go. But I think strong majority was to allow for a case-by-case basis, but understand the need for consistency. And then third, on the communications, we need to figure out the right form of communication to get gathering, recognizing we would have to follow our own due process for any changes. Any reactions to that before I hand it back to Mike? Board members? Okay. Josephine or Mike, do you want to, Josephine, should I hand it back to you as, or?
Yeah, I just make one comment that just in reflecting on the last aspect of that conversation, SPY and PI, I think we also need to reflect that in our communication, whatever form that will take. Obviously, we'll have to decide what that is, because that's not necessarily, because of the conversation we had today and your need to raise that, that's obviously not necessarily coming through. So that's something else we'll need to put in our communications as well, the purpose of the exercise, as well as addressing question 2 and 3. That was all I wanted to add, but I do believe I'm now handing back to Mike.
Great, Mike.
Thanks. And before I go on to the next section, the only observation a couple of points I'd make on that is that I do think the direction of travel we have at the board, we obviously got to still have the discussion and put an exposure draft out, but I do think we are looking to remove the term listed entity per se, not least because one of the concerns that was expressed to us at the outset of this project was there was confusion about that term. And indeed, some regulators use regulated markets. The Forum of Firms, interestingly enough, who are of course the only people who are directly affected by our standards, as opposed to indirectly because PAOs adopt them. The Forum of Firms actually almost universally use a wider definition of listed entities when they're applying our standards as it currently relates to quotes listed entities. So that was interesting in of itself. So I just put those things out there that I think that is definitely the direction of travel, is to have a broader definition of listed entity in any event. So certainly if you were to retain that term within your standards, that would be a distinction, because that would be something which would only be at that stage in the IAASB standards. Anyway, moving on very rapidly. So just to recap on the definition of public interest entity, we went for this broad approach, list of common PI categories. We expect local bodies to refine it, and we expect the firms, if necessary, to add to it. Just to say where we are on that expanded list, if we can go on to the next slide, Jeff, thank you. And this is to some extent changes which have not yet gone through IESBA, just because of the timings of meetings. So I hope Stavros will forgive me in terms of exposing it slightly to this board and comment before I expose it to IESBA. But we've moved in A to a definition of a publicly traded entity, and the straw man we've got up there is what we are currently working with as a task force. So an entity that issues financial instruments that are, and question mark, freely or but concept of transferability and publicly traded. We have tried to refine E to better reflect what we're getting at, which is mutual funds, but mutual funds is not necessarily the same term throughout the globe, and people use unit trusts and other collective investment vehicles. So we were trying to come up with a broad definition which captured those. And this is in F is where we've tried to link this much more closely back to the overriding objective in 400.9. So that's the current draft that the task force is working with, which, as I say, will go to the IESBA board in December. Two other bits then, if we go on to the next slide, where again, these are things which we've not exposed to the IESBA board yet. But one was a view that was expressed, I think actually in this board, inter alia, that there may be laws or regulations which could, quote, designate something as a public interest entity, which had nothing to do with what we regarded as a public interest entity for the purposes of the code. So what is now 400.14A1 was really designed to introduce that balance in there. So it's introducing both the thought that people can use terms other than public interest entity, as long as it's getting at the same thing, then we would accept that that is what it's meant to do. And if they use the term public interest entity, but actually it's nothing to do with our objectives, it doesn't make it a public interest entity just for our code. The other thing in 415A1 was to try and expand the point that actually this is all down to local law and regulation. So in other words, laying out explicitly that the terms that the definitions or categories we've got in 400.14 are broadly defined. They don't give consideration to local context. Therefore, the code does allow for that local context to be introduced. Now, whether this is something we end up with in the code or we end up with in the explanatory memorandum basis for conclusions, I think is still a subject of debate, but we thought at the outset, let's put something down as if we were going to include it in the code. What would we be trying to say? And this is therefore what we have at that stage. So again, something which has still got to go through the IASBA discussion, but is really designed to reinforce this whole role of the local bodies in terms of what it is we're trying to achieve. If you can just flip on, just very quickly, these were a number of the things that people raised as potential additional categories for us to put in 400.14. And we went through each of them. We had a rationale for why we hadn't included them at a global level, but recognized that these ones had a number of features that might make people think about including them at a local level, depending upon what part they played within the local economy and the local jurisdiction. So again, this is something where I think we would draw out within the guidance material, what are the sort of thought process that both led us to conclude that these were not something which we would want to include globally, but were nonetheless something which local authorities might wish to have regard to, or indeed, ultimately firms might wish to have regard to in terms of thinking about what they could add. Just moving very rapidly on, I don't need to dwell on this one. Obviously, there was this concern that local bodies wouldn't have that mitigation, wouldn't have that capacity to refine the high-level definition. So we did look at, as I say, developing guidance around the overarching objective. We did put out a questionnaire to a number of PAOs. We would also look potentially to develop non-authoritative guidance material and have a longer transition period to allow time for those local bodies to adopt the requirements into their local legislation. Just in terms of where we are on the PAO questionnaire, very quickly, we sent it out to about 40 PAOs, mostly smaller, less developed jurisdictions. We've included some Francophone African jurisdictions at the last minute, having found somebody who could translate our questions into French. I'm hoping the same person will be able to translate the answers back out of French so that I can understand them. We'd had 22 responses back as of September. We're going to give an update to IESBA, obviously, in the December meeting. Suffice it to say, I think at this stage, if you can go on, Jeff, at the moment, the majority, as it says there, interesting enough, even though these were the smaller jurisdictions we were deliberately targeting the questionnaires at, a majority of them still have local PI definitions already in place. There was a strong indication that refinement can be achieved in those jurisdictions. Generally, as I say, a number expressed their view that the draft definition is sufficient for them to act as a starting point for them developing their local definitions. There was one PAO who noted that they would have their work cut out to persuade the local regulator to revise the local law. So there's going to be isolated instances, but I was very comforted that for the most part, this is something which should be workable. We did also toy with, and this was discussed at the last IESBA board, I don't propose to dwell on the time on it because the board rejected it. We did have a thought about using a rebuttable presumption to cover the risks of those local bodies not having the capacity to refine the list. But as I say, the board was not supportive of that, so we have moved on from there. So role of firms, lastly, as we discussed last time, and is still baked into proposals, elevating our current application material for firms to consider what additional entities be treated as PIs, to actually making it a requirement for them to consider it. And we've included some factors in there for them to think about. And again, just flick on, Jeff, the latest definition, well, not that fast, the latest definition, which we have not yet taken through the IESBA board, has got these various factors in addition to obviously the factors that that are baked in earlier on, but these are the factors we expect a firm to think about in terms of adding something. So basically, if the entity has actually been explicitly specified as not being a public interest entity, we do not expect the firm to go ahead and say, well, we don't care what the regulator said, we're going to make it a public interest entity anyway. So this is designed to try and steer firms away from doing that. We did think that there was something about whether the entity is likely to become a public interest entity. This was to try and pick up those entities which are in the process perhaps of listing or the process of acquiring a banking license, whatever it happens to be. Again, we did toy at one stage with trying to build that into the overall definition in 400.14, but it becomes very difficult given that you need, I mean, it's very much case by case in terms of determining whether a firm has reached the point at which it makes sense to treat it as a public interest entity. So actually, we felt it better for this to be a requirement for the firms to take into account. In terms of trying to address the consistency point, we do think it's appropriate for firms to think about, well, what's other firms done in similar circumstances, or what has the predecessor firm done with this particular company in the past? So that is something that, again, we think it is pertinent for the firm to think about. It's not, none of these are, if you like, slam dunks, none of these are requirements, but these are all factors to think about. So that is where we are on role of firms. And then lastly, of course, we have this proposed transparency disclosure, which is the point at which I'm going to duck and run and hand back to Josephine.
Duck and run. Thank you very much. So at the July meeting, you remember it was proposed that to enhance confidence in PI audits, this could be facilitated by a firm disclosing in the auditor's report that an audit client was treated as a public interest entity, and that would be in respect of the application of the relevant ethical requirements. And then, of course, 418 that you see here is the proposed requirement that's currently in the task force papers. The board, of course, had very mixed views about this. Some felt very strongly that such disclosure is not necessary for various reasons we'll see on a slide that's coming up, but other board members were supportive of greater transparency and were open to exploring this further. So, of course, again, we did. If we could shift the slides around a bit, Jeff, again, and if you could move on to the next one first for me. So, so the task force and the IAASB correspondent members considered 3 options. So in exploring the options, this is where we're in, and this would be from the IAASB's perspective. Okay, so first, with all decision making, you always have the do nothing option. So that's the option 1. And whilst that might be appealing to those members of the board that were opposed to the change for those reasons set out there, including 2 tiers of audit, it doesn't really directly address the goal of increasing transparency and enhancing confidence. So then we thought, well, option 2, we deal with the matter as part of our auditor reporting post-implementation review, which would mean that there could be a possibility of them making a corresponding change to the IESBA code, such as contemplated earlier in 418. Make sure I've got those numbers right, 418, yep. And then the other side of that is that we could then delay any implementation of the proposals, and that's assuming that they're actually adopted in the first place or supported in the first place. Then, of course, there's option 3, which was some board members' views that we, again, it's similar to the conversation we were having about the listed to PIs and actually demonstrating our agility and utilising the IESBA ED process. And in this regard, IESBA would propose the increased transparency in the auditor's report through that proposed requirement in the code, so 418. But also include an illustration of the impact on the auditor requirements and the auditor's report to bring it to life in terms of our users and IESBA stakeholders as well. So Jeff, if we can move to slide 27 and we can see what that means. And of course, this is also in the papers as well, so I'm not going to belabor. So slide 27 is illustrating the two approaches you would see in respect to option 3, how the changes would be made to the requirements potentially. So it is just illustrative. So option 3A is that more streamlined approach, and then option 3B is more structured. You can see it separates the baseline statement about independence and other ethical responsibilities from the additional statement regarding the jurisdiction of origin of the ethical standards. But in both those cases, Jeff, if you move to slide 28, please, thank you. In both those cases, the ultimate impact on the auditor's report is unchanged. It's really how we're setting up the requirements. So we did take the opportunity to move the conclusion on the audit evidence up to the responsibility under the standards in this regard. But essentially, what we see here is that we're just making one statement in the auditor's report that the company has been treated as a public interest entity for the purposes of the international independent standards. So you have your ethical requirements responsibility set out there, and then this particular requirement that would be reflecting 418. So it's a similar point in the sense that whilst you do have different requirements, you're still only getting the same impact on the auditor's report, and then the user still sees the same thing at the end of the day, regardless of which route option 3 would take us down. I do think it is, however, important to highlight that the PI task force believe that transparency, and I would agree, is such an essential component of its proposals that irrespective of the IAASB's position, and if they were to reject option 3, for example, then they still want to recommend to IESBA that specific comments be sought from stakeholders on this issue as part of the exposure draft process. And that's quite important to remember when thinking about the various options that are available to the IAASB. So Tom, that concludes my piece as well. My task was simple today. And then we have questions 4, 5, and 6 for the board.
Okay, I'm gonna have to thank you both for setting these questions up. There's quite a bit here. I'm conscious that we're 20 minutes left of the allotted time. I just want to get by show of hands, does anyone have a hard stop at the end of this call, or could we go on? Sue, could we continue to go on, say maybe 25 minutes or so, or 30 minutes or so? Bob, I see your hands up. You have a hard stop as well. Fernando, you do too. Maybe what I'll do is ask if those who have a hard stop to say something right now. If you want to go first, drop off. I don't know, for those who don't have a hard stop, what people need. We've been going nearly 2 hours when you need a 5-minute break. No one. If people need to just step out, and take a break as needed, and then we'll try to wrap this up as quickly as possible. But I think I just wanted to give time. So for those who have a hard stop, Sue, Fernando, Bob, would you like to go first, or would you like to comment on questions 4, 5, and 6? Sue?
Okay, thanks, and apologies for that. I think in the previous discussion, I expressed the preference that we didn't have anything in the audit report, so so my preference would be to start with option 1. I don't have a hugely strong view on the formatting. I'm a bit uncomfortable about looking at something that we don't conceptually agree with. I think probably the second option is a bit clearer. But I was nervous actually about moving that paragraph or that sentence up earlier about audit evidence, simply because we put so much work in the audit reporting project on the order of everything. I'm very wary about messing with things, particularly when we are going through that that implementation review. So I think that's it. And then probably similar comments on using the IESBA ED process to what we had on the previous question set around, you know, support that. But I assume that it's going to be that enhanced process that we've talked about to make sure we get IAASB's stakeholders. Thanks.
Thank you. Fernando?
I'm also on the same page as Sue. I would keep option 1 for question 4. And for question 5, I can't remember. I think I'm more in favor of option 3A. And of course, for question 6, support getting input in the process.
Thank you, Fernando. Bob, would you like to
yeah, thanks, Tom. Forgot to raise my hand. Thank you. Very similar to actually Sue's basis for her comments. I think option 1, I'd stop at that for question number 4. Preferred option 3A for question 5. And as stated earlier, I'm a supporter of leveraging and being a little bit creative with how we get input in information gathering and outreach. So would support the process for 6. Thanks.
Okay. I'd like to see if there's counter views on question 4. Fiona?
You knew someone would have a counter view, and of course it would have to be me. So my preference was actually for option 2, sort of wait and deliberate, including the results of obviously the PIR. I think that's the right option when we're talking about potentially fundamental change to the auditor's report, or if we're going to extend any of the reporting requirements. I could probably live with 3 as an interim measure though, if we needed to. Thanks.
Thank you. Julie?
Yeah, Tom, my view is option 2. I think we have an open project to look at auditor reporting holistically. I thought that this made sense to add to that and not, you know, get out in front of that project. So I was definitely in option 2 camp. I think for the time being, I think option 1 could suffice. I don't think what's in the auditor's report now is inappropriate, and I think it's meeting the needs at the moment. So I was in option 2 camp with not changing anything in the interim.
Right. Rich?
One of the few times I'll be able to say this, I agree with Fiona that I would be in 2. I could live with 1 just for the same reason Julie just said, but I think we have an outstanding group that's looking at audit reports, and therefore I think there's feedback that's going to be similar on what's the relevance of information and should things be changed. So I think that's the time to think about it. If I was to look at 3, then I'd be 3A, and I'm okay with putting a question out. The one question though I had as this was coming up, I have not spoken internally about this, so I'm sorry if it's an obvious response, but if the IESBA eventually included 400.18 and we disagree with that in our eventual review of 700, what happens there? I mean, can they really put that out there not knowing where we'll eventually end up? Because it is an auditor's decision, I would thought. It's under the IAASB's remit of what goes in the audit report. Again, maybe there's other considerations, but it just got to me when Mike and Josephine were talking about this. Thanks.
Okay. Isabel?
Yes, thank you. So I think I am in option 1 and 3, so which means that probably I'm in option 2. I started by considering that we should not change anything. So I'm in option 1. And why shouldn't we change anything? Because when you look at the audit reports in Europe, they are so specific for PI, because we have a specific regulation for PI, but it's obvious when you read the report that the report relates to a PI. So why would you add something in addition while you already have the key audit matter that apply to all PIs in Europe, and you have additional specific paragraph? So it's very obvious. So there was nothing to change, but in fact, I'm already in option 3, because in option 3, you have a different report when you have a PI. But then, where I'm very uncomfortable, it's for the entities that are treated as PI, why they are not PI. Because in the regulation for PI, you have rules that apply to auditors, including independence rule, but you also have rules that apply to the entity. For example, the requirement for the entity to have an audit committee. So having transparency on the report that you have considered an entity as a PI, while it does not comply with all the other requirements of a PI, I would believe it's really misleading for the reader. So I'm not against having something specific when an entity is a PI, because it's already what we have in Europe, whether we like it or not. But having transparency that an entity has been treated as a PI, while it is not, and it has not applied all the rules applicable to a PI, for me, it's very misleading. So for all these reasons, I would prefer to stay in option 2 and think further about it, because I don't want our reports to be misleading. Thank you.
Thank you. Chun-Li?
Thank you, Tom. So first of all, I did not raise my hand the last round because I was with the majority. So the case by case, and also supportive of leveraging on IESBA ED process. So coming to these questions, first of all, I am happy for us to explore transparency, but I guess the question is, just saying that the entity has been treated as PI for the purpose of audit. Do we have the full picture? And I tie it to the earlier conversation about how we're going to look at it on a case-by-case basis in terms of our ISA and ISQM, whether there's any appetite for us to switch the listed to PI. And if we do that, then I think it would have implication on this transparency. The overall consideration, I think, would be necessary for us to really contemplate before we determine what we disclose within the audit report. So it's not just treated as PI for the purpose of the ethics, the code, and for independence, but also if there is any implication on the audit, whether there is a need to put in some wording on that. So I guess the long story short is I'm for option 2 for us to maybe look at this in the longer term. To make sure that when we landed where we landed, then we have a more holistic view on that. So that would be my take, Tom. Thanks.
So let me just ask Mike or Vili or Josephine. If we were in option 2, one possibility is still to get feedback on option 3 as part of the consultation process. Am I right? Like option 2 does not preclude getting feedback on option 3. Am I correct?
I think so, yep.
Yeah, the idea is that we would still utilize IESBA's process in considering or obtaining input from our stakeholders as whether this is something they have an appetite for, yeah.
And we would just have to be careful about how we message the potential impact in whatever wrapper we put around the consultation for our specific stakeholders. Is that okay? So the only reason I'm asking that is for those who the growing sentiment towards option 2, which doesn't ultimately preclude option one in the long term, but provides some ability to get some consultation in the pre-existing process, is whether they support IESBA's getting feedback on our behalf with the appropriate wrapper on option three as well. To some extent, that is provides us, not to belabor this term, the most optionality as a board, without precluding any direction in the future. But please be specific whether you're okay with that approach as an option two approach, if that's where you support. Len?
Yeah, thank you, Tom. Yeah, like others, I prefer option two. I think it's very important to make sure that we do put transparency in our agenda. I think we shouldn't be not doing it, but definitely need to explore more greater transparency. And this is a good topic to explore. On your question about 6, yeah, I support the approach you described. Like what Rich said, I think this is impacting audit reporting. So IAASB should be taking a lead in terms of the language and specific wording to disclose that in the auditor's report. So it should be more on the other side of the IAASB take it forward. But I do appreciate using the IESBA exposure draft to tee out the issues. The reason I just add one level in terms of supporting option 2, I think, with the new definition on PI, also we have to make sure that people actually understand the difference. So that should do require additional deliberations going down the path of option 2. But I do support a transparency mandate in this project. Thank you.
Okay, Sachiko.
Thank you. First of all, my general position to the proposed transparency requirement is that I think we need to carefully consider whether there will be unintended consequences or unintended misinterpretation. And therefore, my position for option is I also support option 2. I think because that the change made to the reporting includes description of the relevant ethical requirement in the auditor's report. So before we get the result of post-implementation review, I think it's too early to change something that relevant to that area. And with regard to question 6, I'm fine with the direction to get some input in the IESBA exposure draft. Thank you.
Thank you. Imran.
Thank you. Josephine, Tom, and others. I think that this is really an studying opportunity for us as a board to think about this proposal through the lens of the monitoring group's public interest framework. There are process ways to answer this, but if you answer this from the 6-part monitoring group framework, then the reasons that feature elsewhere in the slides for option 1 and option 2 have much scope to be rebutted by what the monitoring group has put before us as a way to think about what is in the public interest. So I'd argue that there's timing reasons, perhaps some technical reasons why option 1 or option 2 could have some appeal, but there is a inherent inconsistency in being pro-transparency, but saying not now, let's think about it much later. For that reason, I'm supportive of the IESBA's approach in respect of R400.18, congratulate them on putting that forward in the way that they have, and therefore supportive of option 3, recognizing that it needs some development and clarification, but believing that that is, in my understanding, the preferred public interest approach if I were to apply, as I currently understand, this new monitoring group framework. Thank you.
Thank you, Imran. Kai Martin?
Thank you. Similar to others, I think I prefer option 2 and very much support the the process I outlined for utilizing the IESBA ED process to get input. Thank you.
Okay, thank you. Eric?
Thanks, Tom. Going into the discussion today, I was very much in the camp of option 1. I had quite a few concerns about the proposed wording that was in option 3 that was kind of scaring me off. But having heard the discussion, I think your proposed suggestion of going with an option 2 approach and at least socializing the idea of increasing transparency around this issue is the right way to go. So I'm supportive of option 2 and bringing this out in the IESBA ED. Thank you.
Thank you. Roger?
Yeah, Tom, I'm in the option 2 camp. I think we leverage off our current process. We've got a process set up to have a look at that. But having done that, we again, I think as part of option 2, leveraging off the option 3 process makes sense to me. So, you know, what you proposed makes sense as a way forward.
Okay, let's get a sense of the board because we started with a few option 1s. We got one very pro option 3 approach, but my categorization of what I've heard the great majority say is that you're in favor of the option 2 approach with IESBA getting input with the appropriate wrappers from us on option 3, and therefore option 3 is not precluded in the future either. And so I just wanted, by show of hands, is that position supported? Digital hands, please. Two, 3, 4, 5, 6, 7, 8, 9, 10, 13. I think 1, 2, 3. I think someone may have dropped off. Okay, put your hands down. I just want to be clear as I think we have a working majority, but I don't like to stifle debate. Anyone strongly object to that approach? Okay, I think we have clear guidance here. I don't see strong objection. I don't think it precludes, Imran, you may think that, I don't think it precludes your option 3 approach. In fact, I think it facilitates a long-term, but people would make comment on speed by which we're embracing option 3. And is that as much your point as anything else in our commitment to it? Yeah, okay. In truth, I think from a due process requirement, we would have had to put a formal project proposal and go through the process anyway. So I think this accelerates our information gathering, if nothing else. So by the way, as Sue got cut off, that's a 14th supporter of that initiative. Mike and Josephine, any reaction to that guidance?
No, I think that's clear. Thank you.
Yeah, Vili, any takeaways from a staff or execution standpoint?
No, Tom, I think the direction is clear. I think what our board is saying is we can use the ED process of the ethics board to explore the transparency, all 3 options, including the last option of transparency in the auditor's report. I do think we owe this at least to explore all 3 options, because I think without the transparency requirement, one could actually ask whether the overall objective is actually being achieved. So I think if we can explore all 3 of those options, then at least we give the opportunity to get stakeholders' feedback on that. Thank you, Tom.
Yeah, Josephine, I think the option 2 isn't really an option other than it's an avenue for consultation and input. So option 1 and 3 are sort of the actual action requirements, right? Am I correct?
Yeah, I was going to say, the other thing I want to say is that I believe it was also mentioned, there was caution expressed about moving up the order evidence paragraph from Sue. So just do bear that in mind as well. And I did see, of the people I could see on my screen, I did see some nods around that. So we need to be cautious of that as well.
Yeah. Okay. I conscious that I don't know, Jim and Karen, if you have anything to add on this specific question. Obviously, I'll turn to you before we close the meeting.
I think that with putting out the 3 options for feedback from stakeholders, that is a baseline. I, of course, the PIOB supports increased transparency for the public interest. Thank you.
Jim?
And Tom, I would say option 2 would be the best.
Yeah. Okay, great. Clear feedback. Mike, I turn it back to you.
Okay, and I don't necessarily need to go through the rest of these slides. We discussed related entity earlier, which is clearly it's the one place we use listed entity at the moment within the IESBA code is around the definition of audit client, and including upstream and sister entities if you are a listed entity, but otherwise not. As I said earlier, that definition is aimed primarily at conventional corporate structures. Clearly, you may well have listed entities in unconventional corporate structures today. In particular, I can think that, if you take Temasek, which is a sovereign wealth fund in Singapore, I'm conscious that has interest in a number of listed entities. But clearly, if we were to expand it to all pies, that would potentially widen the net quite a long way. So suffice it to say, I think we are going to try and find a way of potentially within finalising the PI project just to restrict it to our revised definition in category A, so publicly traded. But the question of what related entities should be included in the definition of audit client for the purposes of our standard is another project I think we're going to have to take on board and think about some of these less conventional structures. And then effective date, again, we're just looking at potentially, again, this is something that the board has still got to go through, but we're looking potentially at quite an extended date to allow local authorities to deal with that. And then next steps, we've obviously got the SMP, we got the IESBA December, and we're looking to try and get an exposure draft out in January. That's our timeline.
Thank you. Okay, I think Josephine, would you like to come in?
Yeah, I just wanted to, it's really a question to Vili. Vili, I'm sorry putting you on the spot. So just so it's clear to our board in terms of wrappers and the ability for our board to input to that process, do you have any idea yet of what the timing of that might be? Or is it a matter of us sort of putting our heads together with Jeff and Mike and work out how best to communicate that to the board?
Yeah, so we had a brief discussion, Ken, and please, Ken, if I get this wrong, come in, but being respectful also of the time of the year, Ken is willing to consider that this exposure draft only goes out at the end of January. So that gives us a little bit of time to work on it internally, and then maybe to share what we want to put what we want to put in the explanatory memorandum from an IAASB perspective through our normal round robin process, like we will do with our board to just get offline input. I don't think we will discuss it again at the plenary session, but normally, as we will do, if we prepare an EM, we will circulate it to the board for any input. And I'm sure we can coordinate with Ken and his team to get that done within that time frame.
Thank you.
Okay, thank you. Any other reactions or views that want to be shared before we try to bring today's session to a close? I thought this was a really excellent conversation, and it keeps us, at least as from my sense, moving forward, and still with a high possibility of being very aligned between the two boards going forward, particularly going into a comment period, though the devil will be in the details, particularly if we continue to adopt this case-by-case approach. To me, the critical issue then becomes, if we want a case-by-case approach, that we align on whatever the term listed entities and publicly traded entity, or whatever term IASBA uses has to be aligned to whatever term we use, because that becomes a very key subcategory. But clearly the intent is towards overall consistency and coordination throughout. So thank you, Mike and team. I know it's not just you, it's a big team effort here, and thank you for including Josephine and Fiona in all your work, and our staffs for doing such a great job staying coordinated throughout. It's a pretty exhaustive process, and I could tell you, Stavros and I talk all the time about the need to remain aligned on our work, particularly on this key public interest project. Before I close, I'll ask Jim or Karen, would you like to say anything?
Thanks, Tom. I think I've already said it. The public interest entities project is significantly important for the public interest, and the PIOB is very hopeful that the work with IESBA will result in a significant alignment between the two boards, not just that you've worked closely together, but that you have come to alignment. And I think I've already spoken to the importance of transparency. I think it's important for the board to understand that, you know, in the project of the expectation gap, the public is not as aligned in what happens in an audit. So the more transparency that can be provided, the more possibility for the public to understand what has occurred. So thank you very much.
Jim?
Thanks, Tom. And just to reiterate, the CAG meeting, we did have discussion on the first topic this morning. And the CAG, as I said, thought it was very important that the boards come together on this issue of definitions. And so I'm glad to see that's being addressed. And that's really all I have for this morning.
Okay, that's great. Thank you all. We're now 12 minutes over time. I know that when I borrow 12 minutes of your time, I need to find some ways to make up that deficit. So tomorrow we will try to make up that deficit. We meet at the same time tomorrow. We're talking about conforming amendments. I think it's this famous last words. It's possible to pay back that deficit to you tomorrow, but that depends on how robust the comments are. And just thank you all, and thank you our IESBA colleagues for joining, and I'll see you shortly. Thank you very much. Bye.
Thank you and goodbye.
Thanks, Tom.
Bye-bye.